Imagine buying a handbag today and watching it earn more than your savings account by next. You imagine a fashion accessory quietly, outperforming the stock market while you're busy taking mirror selfies with it. Now imagine knowing exactly which bags can turn your closet into a profit machine. Let's talk about real luxury investing, the kind that makes your money look better than your outfit. Luxury handbags aren't just fashion anymore, they've become one of the strongest alternative investments of the last decade, quietly outperforming stocks, gold, and even some tech companies. Once you understand how and why these bags rise in value, you'll never look at a handbag the same way again. Let's begin with the shift that shocked economists, investors, and even luxury brands themselves. Over the past decade, handbags have consistently outperformed traditional investment classes. According to global luxury indexes, the average appreciation of top-tier handbags sits between 12 and 18% a year, outranking the S&P 500's annual 10.1%. That means a single well-chosen handbag can quietly beat some retirement portfolios. It's not magic, it's a combination of branding, scarcity, craftsmanship, supply pressure, and insane demand. And don't worry, we'll break it all down in the simplest, most entertaining way possible. Hermès sits at the top of this investment universe like a quiet, elegant monarch who doesn't need to speak because everyone else already knows the rules. The Birkin and Kelly are not just iconic. They behave like financial assets, with retail prices increasing consistently and resale prices performing like premium stocks. A Birkin 25 in Togo leather retails for around $11,000, but depending on color and condition, it can resell for $20,000 to $30,000+. Some color combinations even touch $40,000. The Kelly, especially in popular sizes like 25, often doubles its retail value as soon as it leaves the boutique. The reason is painfully simple. Hermès produces far fewer bags than the world demands. Their craftsmen build bags by hand, production is capped, and boutique purchasing is notoriously controlled. Scarcity drives value, and Hermès is the undisputed master of strategic scarcity. Every time Hermès announces a price increase, collectors don't panic, they celebrate. Why? Because it immediately pushes the resale value up. Imagine stocks doing that, your portfolio would look like it drank an energy drink. While Hermès operates like a luxury bank, Chanel behaves like a luxury hurricane, unpredictable, dramatic, and powerful. Between 2019 and 2025, Chanel doubled the price of its classic flap bags. The medium flap that used to cost just over $5,000 now sits above $10,000 at retail. Chanel didn't do it quietly. They did it loudly, continuously, and without blinking. And guess what? The market didn't collapse. People bought more. The resale market stayed strong, and certain Chanel minis and seasonal flaps even sold above retail depending on color availability. Chanel bags are no longer fashion pieces. They've become inflation-proof luxury assets with strong demand, especially in classic colors like black, beige, and white. Every time Chanel increases prices, someone somewhere says, "This is ridiculous. I'll never buy Chanel again," and then quietly buys it anyway. That's brand power. Let's shift to Louis Vuitton, a brand everyone knows but few realize contains hidden investment gems. While many LV bags flood the market and depreciate fast, certain models rise steadily because of limited production and higher craftsmanship levels. The Capucine's bag, for instance, has quietly become one of LV's most investment-worthy pieces. It's structured, elegant, luxurious, and crafted like a high-end piece rather than a mass-market bag. Depending on size and season, the Capucines can appreciate between 10 and 22% on the resale market. Limited editions often sell out instantly and then reappear at inflated resale prices. The twist bag also holds strong, especially in neutral colors and special editions. Even LV's seasonal styles, like the By the Pool collections, have become summer favorites with fast resale turnover. Now let's talk about something most people never think about: why some bags appreciate and others collapse in value. It's not random. It's a formula. The first factor is scarcity. When a brand limits supply intentionally, demand rises. That's the Hermès strategy in a nutshell. The second factor is brand reputation. Strong brands with consistent heritage storytelling create emotional value, which becomes financial value. The third factor is color psychology. Neutral tones like black, gold, étoupe, beige, and cream consistently perform better than trendy seasonal colors because they're classic and universally desired. Another major factor is celebrity influence. When influential figures carry a certain bag, the resale price can jump overnight. In early 2025, after Kylie Jenner was spotted with a Kelly 20, resale prices for that exact size climbed in multiple markets within days. Here's another hook to keep you awake. Fashion trends change, but rich people's favorite colors do not. That's why neutral bags behave like stable stocks. If you're curious about how to start investing in luxury bags, the approach is simpler than it seems. The smartest first step is choosing the right brand. Hermès is the safest high-return option, but also the hardest to buy directly from boutiques. Chanel offers strong, steady growth, especially for classic flaps and minis. Louis Vuitton has winner pieces like the Capucines and Twist, but avoids hypersaturated models like the Neverfull if you care about appreciation. Dior's Lady Dior bags also retain value well when purchased in classic shapes and colors, and if you love minimalistic sophistication. The Celine Triomphe has gained surprising global traction in 2024 and 2025, lifting its resale value in a way nobody predicted. Once you pick a brand, the next step is choosing the right model. Investment bags share the same traits: timeless design, structured shape, clean lines, and strong brand DNA. The Birkin, Kelly, and Constance lead the investment category for Hermès. Chanel's classic flap and mini flap dominate their brand's resale space. Louis Vuitton's Capucines and Twist bags are their strongest performers. For Dior, the Lady Dior in small or medium remains the most stable pick. Shape matters. Structured bags perform better than slouchy, flexible designs because structure equals longevity. Another important step is understanding the color hierarchy. Neutral colors behave like financial safe zones. Black and gold are the kings of appreciation. Beige and cream deliver excellent consistency. Gray, taupe, and white follow closely behind. Bold seasonal shades can be fun, but they rarely perform as well unless they're limited editions or celebrity-driven trends. There is also a golden rule in luxury investing. Whenever possible, buy directly from the boutique. Retail prices will always give you the highest long-term return. Buying from resale platforms is perfectly fine, but make sure you understand the market value and authenticate the bag properly. Platforms like Fashionphile, Rebag, and The RealReal offer transparent pricing and strong authentication services. Tools like Entropy have also become popular because they add a layer of verification through AI-powered image analysis. Buyers today want authentication more than ever, especially with the rise of high-grade counterfeits. The real turning point in handbag investing happened between 2020 and 2025, when global pricing trends skyrocketed. Hermès increased retail prices consistently. Chanel doubled theirs. Louis Vuitton adjusted pricing yearly, while adding more high-end, structured bags to compete with the luxury investment trend. The result is a market where certain handbags behave like physical assets, with stable, nearly predictable appreciation rates. A Birkin's value graph looks almost identical to a growth stock. A Chanel flap mirrors the long-term rise of luxury inflation. And LV's Capucine's performance resembles a mid-cap stock with strong brand support and seasonal boosts. As we approach 2026, luxury investing continues to evolve. More collectors treat handbags like diversified assets. Some keep them sealed in dust bags. Others rotate their collection strategically. And some buy limited editions solely for resale. The mindset has shifted. Handbags are no longer seen as splurges, but as smart purchases when done correctly. And yes, the right handbag can genuinely outperform certain investments, giving you both emotional satisfaction and financial upside. Some people make more profit walking out of Hermès with a bag than others make from a full year of investing. That's luxury finance in 2025. Handbags aren't replacing traditional investments, but when chosen wisely, they can quietly strengthen your wealth portfolio and turn your closet into a strategic, profitable asset. If you enjoyed this deep dive, make sure to like, subscribe, and drop a comment telling me which luxury investment you want next: watches, jewelry, sneakers, or real estate. Your next smart profit move could start with the very next video.